You've handed us an analysis report that, frankly, charts one of the wildest single-day moves we've seen in a while.
Oh, absolutely. We're looking at the energy sector, but this is really a tech story.
It is. We're focused on a company called OKLO, and the mission today is to figure out what was behind this absolute explosion in their stock. We're talking about a near 15% gain in a single session.
And it's our job to unpack that, to get into the why, the mechanics, and what it tells us about this intersection of energy and, well, artificial intelligence.
Exactly. Because the hook is right there in the headline number from that January 5th session. I mean, a staggering 14.79% surge.
Yeah.
For a company that's pre-revenue, a move that big tells you something fundamental has just shifted in how the market sees them.
It has to. And the source material you've given us makes it very clear. This isn't random noise. It's tied directly to, maybe the single biggest tech narrative of our time, the race to power AI.
Okay, so let's dig into that movement. Before we get to the why, we have to appreciate the what, the raw force of it.
Right.
The analysis you found characterized the day as, and I'm quoting here, absolute dominance by the bulls.
It really was. It wasn't a gentle drift upwards. This was a statement. If you look at the specifics, the stock opens at $81.65.
And it didn't fade. It accelerated all day.
It did. It closed right near the highs for the session at $89.34.
So that's a raw gain of, what, $11.51 in one day. That's just monumental for an early stage infrastructure play.
It is. But, often these huge one-day pops can be just short-term noise, right? They fizzle out at the bell.
Okay, this one.
Well, that's what's so interesting. The report notes that the buying didn't stop at the bell. The after-hours trading kept pushing the price, getting it even closer to that $90 mark.
Okay, so what does that tell you in terms of market psychology? Who is behind that kind of move?
It suggests something deeper than just a retail frenzy. When you see that kind of sustained buying outside of market hours, it often points to institutions.
Bigger players.
Bigger players, yeah. They're trying to build a position without moving the market too much during the day. This wasn't just short covering. It looked like deliberate accumulation.
Yeah.
It signals a longer-term view.
A foundational shift.
Exactly.
So that brings us to the core why. What is this long-term thesis that justifies such a high-stakes bet? The analysis immediately points to two words.
The magic words.
AI energy?
This is it. This is the whole ballgame. The sources are highlighting a critical imbalance in our global infrastructure right now.
So let's be really clear about the problem. When we say AI, we mean data centers. What kind of power are we actually talking about here?
The scale is, it's almost hard to comprehend, and it's growing exponentially. Training one of these huge AI models can use the same amount of energy as thousands of homes for a year.
Wow.
And it's not just that they need a lot of power, they need perfect power. 24/7, totally reliable. Any interruption is a disaster.
And the analysis report is adamant that the usual clean energy sources, they can't meet this specific demand. Why not solar and wind?
Because they're intermittent. They just are. AI needs constant, high-density, dispatchable power.
Dispatchable meaning you can turn it on whenever you need it.
Exactly. On-demand, rock-solid, baseline power. Solar and wind can't guarantee that without, absolutely massive battery storage systems, which adds huge cost and complexity. The analysis concludes that to do this reliably, big tech simply needs nuclear.
It needs nuclear. And this is where OKLO comes in. The report uses this really provocative phrase, calling them the Tesla of nuclear.
Yeah, that's a big claim.
It's a very big claim. Does the report actually back that up with anything?
It does. It focuses on their approach to deployment and scale. So traditional nuclear projects are these, monolithic, multi-billion-dollar things that take a decade plus to build.
Right.
OKLO is focused on something called small modular reactors, or SMRs.
Okay, let's unpack that. SMRs. What makes that technology the right fit for a data center?
It's all in the name.
Yeah.
Modular. These things are designed to be built in a factory, standardized, and then you ship them and deploy them right next to where the power is needed.
So next to the data center itself?
Potentially, yeah. It cuts down construction time, it cuts down costs, and a lot of the site-specific regulatory headaches. They're not building a giant power plant, they're building distributed power modules. And that's the Tesla comparison, disrupting a slow, heavy industry with fast, scalable manufacturing.
That makes perfect sense. So if you, the listener, are trying to find that foundational play on the AI world, you're not just looking at chips, you're looking for power that's clean, reliable, and crucially, can be built quickly where it's needed most.
Precisely. And that's the high conviction, long-term story that the big money seems to be buying into right now. They're buying the future infrastructure, and the market is suddenly waking up to how urgent that need is.
Okay, so we have the long-term narrative. It's compelling. But a story alone doesn't usually create a 15% pop in one day. That kind of move suggests the market mechanics were perfectly primed for it. Let's look at the preconditions the report mentioned.
You're talking about the coiled spring setup.
Exactly. Before this big surge, the stock had actually pulled back into the low 70s.
Right. It was volatile. The analysis saw that as a necessary correction. It basically shook out the weak hands, the short-term traders who couldn't stomach the swings.
So that cleared the decks. And when you look for that kind of acceleration, you always have to check the short interest. The report directly links this to a potential mini squeeze.
That's the accelerant. The report highlights a key number. Short interest was sitting around 13%.
13%. Just to put that in context, that's a significant number of shares being bet against the company.
It's a very significant number. It means there's a lot of fuel for a fire.
Mm.
So you have this powerful AI narrative bringing in the big buyers.
And they run right into a wall of short sellers.
A 13% wall of short sellers. So when the price starts to move up that fast, those traders who bet against the stock are suddenly facing huge losses. They're forced to buy back shares to close their position.
Which just pushes the price up even more.
It's the definition of fuel on the fire. It amplifies the initial buying pressure and turns what would have been a strong day into that massive, near 15% surge. It's a perfect storm.
That explains the velocity. But now we have to talk about the big risk, right? The elephant in the room that every skeptic points to. The company is pre-revenue.
Yeah, you have to confront that head on. It's not a small risk.
It's all a future promise. What does the analysis say about that leap of faith?
The Barakan argument is real. This is an early-stage company in a brutally regulated and capital-intensive industry. Their tech is still in the deployment pipeline.
But the report counters this with what it calls the safety net that truly matters.
And that's the balance sheet. For a company at this stage, the report found its financial position to be, frankly, exceptional. OKLO is sitting on roughly $1.2 billion in cash.
1.2 billion. Okay, that's a huge cushion. But in the nuclear industry, is that enough? Why is that a fortress?
It's a fortress because of the new SMR context. A traditional plant can cost $5–10 billion. SMRs are designed to be much cheaper. But still, getting through regulation and initial deployment costs a ton of money and takes time. That $1.2 billion gives them a very long runway.
And for you, the shareholder, what's the critical implication of that cash pile?
It's all about dilution. It mitigates the risk of dilution.
Meaning they don't have to keep selling new shares to raise money.
Exactly. Pre-revenue companies constantly have to go back to the market hand in hand when they need cash. That dilutes the value for existing owners. This cash pile means they have the runway to navigate the regulatory process and hit their stated 2027 deployment target without having to do that.
So it changes the conversation. It's not can they survive, it's can they execute.
That's it. The cash underwrites the execution risk and allows the market to look past the fact that there's no revenue today and instead focus on that 2027 goal. It buys them time, which is the most valuable thing they can have.
All right, let's pivot to the technicals, the short-term picture. What are the key levels the analysis highlighted that are driving the momentum traders now?
Well, the big one, the ceiling that had been holding the stock back for weeks, was that $85 resistance level.
And the January 5th surge.
The report says it smashed through like it wasn't even there.
Yeah.
When a resistance level breaks with that kind of force, it almost always becomes the new support, the new floor.
Okay, so with $85 in the rearview mirror, what's the new target? Where is the momentum pointed now?
The immediate target, according to the analysis, is that big psychological level,
Yeah.
$100.
The century mark.
Yep. Crossing a big round number like that is critical. It validates the story for a whole new group of investors. It triggers news alerts, algorithmic buying.
Okay.
It acts like a magnet.
And on the downside, for people who just bought in, what's the new line in the sand? The support level that has to hold.
The analysis is very clear on this. The new floor is $80. As long as it holds above 80, the bullish thesis that drove that massive surge is considered fully intact.
So to sum up the view from the report, as long as the AI hype train keeps rolling, this stock is going to be a magnet for volatility.
A favorite vehicle for high beta traders is how they put it.
Right. Crazy swings, but the fundamental trend is pointing north because of that infrastructure demand.
It sits right at that nexus. It's a speculative growth story, no doubt, but it's one that's built on the certainty of this exploding demand for 24/7 clean power.
Okay, so we have taken a deep dive. We've gone through the massive 14.79% move, the Tesla of nuclear narrative, and that critical $1.2 billion cash buffer that de-risks the whole thing.
I think what's most important for you to take away from the source material is the tension here. You're seeing a battle between the short-term, squeeze-driven volatility and this really powerful long-term story about powering the future.
So what's the final thought for you, the listener, to chew on after all this?
The report frames the investment thesis very clearly. You are, quote, buying the future infrastructure of the AI world. So the critical question for you to really think about is how you weigh the risk versus the reward here.
The risk being execution.
The very real risk of hitting those pre-revenue deployment targets, specifically that 2027 goal, against the near certainty of this massive growing demand from big tech.
Yeah.
How do you balance execution risk against what seems to be a guaranteed market? The answer to that question will likely define the future of this investment.